I'm Corbett Wall with DV Auction, here with your feeder flash for Monday, August the 27th. Cattle on feed report threw another hurdle out and another stumbling block in front of the market once again. We've kind of got all the fundamentals anyway turned in our favor, but your commodity markets, your futures, cattle futures, just did not follow the fundamentals that well. So it's really hard to do that when you've got the board working against you, and then when you do have a big fundamental report, like I said, the USDA does, they put all those numbers together behind a big veil, and then they pull it back once a week, and everybody just has to hang on because we know we're going for a ride one way or the other. Most times, this time it's going to be a little bearish again. But look at the board at the end of the week. October live cattle ended the week at 106.70, down 202 for the week. August spot live cattle late in the spot month at 106 1/4, down $1.70 for the week, where we're selling fat cattle at $1.09. You're not hearing very many hedged feeders complain about the basis they can pretty much bank on. And we're getting to the time of the year where most of you don't have a big basis, and sometimes it's a negative basis, but they got to put another $3 or so in their pocket once again, and that's good for the hedged feeder. It's hard for somebody that's trying to use that futures market to put an estimate of what the cash market's going to be when it comes to fruit. October feeder cattle ended the week at 146.72, down 208. August spot feeders 149.20. had to be up 18 cents because it's got to come together with the cash index value, and those index values are now at a premium to the board, which they haven't been for many weeks. Your fat cattle trade, you might have had a little bit of cleanup on Friday, but the bulk of the sales were on Wednesday and Thursday, and through Thursday 92,200 head had sold in the 5-area feeding region. Southern Plains established at 109, that was only 50 cents lower. Northern Plains 108 to 109.50, kind of a big spread there. And it's funny because all of a sudden you're getting some cattle selling live in Nebraska and places at the 109.50 at a premium to the Southern Plains market, and they have not been near as current on their show list. And a lot of those 108 cattle are in northeastern Nebraska and places, and those cattle are driving right by all those other ones to go all the way to southwest Kansas for slaughter. And it's a little bit confusing. But you throw all those 5-area live sales together, and your live steers had a weighted average price of 109.08, down 44 cents from the bulk of the trade a week ago or the previous week. Dressed steers traded mostly from 173 to 174. They had a weighted average with 172.82. Down just 34 cents from the previous week. So as bad as it may have sounded, it's not really that bad. Neither of your weighted averages were even down 50 cents. So fairly steady market there. Box beef cutout values, they at some point through the week had some of the highest marks we've seen in months since early summer, when we had a lot of grilling demand, and that's kind of petered out as we got into the really hot temperatures. But come back there, and we're through the sales for Labor Day demand, but still pretty good, and your export market is excellent. Beef exports were over 20,000 metric tons for the second week in a row, which is a huge volume. And year to date, your beef exports are nearly 20% higher than a year ago, and just excellent demand from our overseas and our north and south customers there. But you look at your cattle on feed report, it was bearish, but sometimes it looks worse than that in print because of rounding. But if you look at your August 1st inventories on feed, come out to be 104.6% of a year ago. Your guesstimates were, the average of those was 104.4. They only missed it by 0.2 percentage point, but when you put it in print, a lot of times due to rounding, it comes out to 105 to 104 and looks maybe a little more bearish than what it is. Now your placements were bearish. Your July placements come out at 107.8% of a year ago. Most guesses, the average of them come out to be 105.5. So yes, that is going to be some bearish, and that miss in those placements is what caused that 0.2% in your inventory number to be a little different, but your marketings through July come out to be exactly what they thought at 104.9, and that's good when they come together. Heard several people talking, and more than one or two sent me messages on that. They kind of keep track of inventory levels, cattle on feed levels, your placements, and how they work through the system. And a lot of these numbers are not jiving whenever it's all said and done. And you know, I worked for USDA for a long time. Those numbers are just estimates from them too. You have your analysts' estimates of what the USDA is going to say, but those are really just estimates too. But like we always used to say with USDA, it may not be right, but it's official. And that's what you have to go with. But 19 out of the last 20 cattle on feed reports had larger placements than a year ago. That tells you that at some point we're going to start to turn back with supplies being in our favor, I mean the market's favor. And if you've had that big of placements, you know you've been feeding a lot of heifers. We know that we've been feeding a lot of heifers. So if you haven't kept many heifers back going on 2 years, it's going to start showing up a little bit. And we know that our beef cow slaughter has been a lot bigger than last year, or 5-year average too, over 10% more. So that's all going to come to fruit. We're going to have a lot lighter numbers of calves. I think we're sure going to see that show up. Maybe not this fall, but it'll be starting to come. But by next spring, I think we're going to see it really show up in your market that we've got a lot less calves coming through the system. But 12% more cattle placed weighing under 800 pounds than a year ago. So that means less of your heavier weight placements. So once we get through these big slugs of market ready cattle on your show list, we get through them in the next month, 6 weeks here, then we're going to start to see that our supplies on feed are pretty green, and that'll be good for the market too. But let's look at your feeder cattle markets. Your real-time index ended the week last week at 150.03. That was actually $2.26 higher than the previous week's end of the week. So it may not have seemed like the market gained that much ground, but really your sale barn trends for the week last week were kind of unevenly steady to $3 higher. The full advance was on heifers in the southern plains, as you know, the heifers were lagging a little bit behind, but man, your heifer buyers come in there and caught that up here in the last week or so. Also, your 9-weight steers saw the full advance of the market, but really good demand for feeder cattle. We did see it tail off. I know we did, sure, on Friday after the bearish cattle on feed report, and it started to come off a little bit, you know, during Thursday's sales. But if you remember, early in the week and in the middle of the week, we had a lot of good sales. We had a lot of those barbecue specials up in the northern plains and in the Midwest. Bassett had a special that pumped a lot of high dollar cattle in there. Creston, Iowa, Tecumseh, Nebraska. There was a lot of good sales up there that had big sales, had big specials. But another special sale that was held late Friday afternoon was Bluegrass Stockyards had their barbecue special. It was the internet sale. Also 7,300 head there, and it was unfortunate timing for them. You know, the market is so volatile. You're just damned if you do and damned if you don't, and you just hope that you don't keep falling on the same day of the week where you're going to get hammered. But that didn't turn out good for the timing as it was. I mean, they sold the cattle as good as they could. They had all the same buyers there. They were offered for sale. They couldn't do anything different about it. It's just timing. But you know, I remember it's not been that many years ago that feeder cattle market moving $1 or $2 in a week would have been a big deal. Now it can be a lot more volatile than that, just within one sale, one auction, one day's trading. It's just so volatile anymore. And whenever you fall on a bad day, like on a Friday afternoon after you've had a bearish cattle on feed report and your futures markets have been down hard after a lower fat cattle trade, it's tough. But they still had good sales, offered a lot of good cattle on there from, I think, 12 different states. You look at these cattle here, they belong to Phil Webb in Ohio, and they had a load of real nice big 950-pound steers, end up bringing 136 1/4. But the market that was in Bluegrass, but at Richmond, it was an on-site sale. just show you the difference. Those cattle showed up at Jim Dawes' sale there in Richmond, in town, and how he keeps getting them to bring those loads in there, I don't know. It's probably because he sells them so high. But the first load of the day, first load lot of cattle sold anywhere on Friday, was still just as good as any time during the week. And if you look at that, you know, a lot of people out west were still asleep whenever he run 120 head of 910-pound steers in the ring, bring 144.40. And that was at Bluegrass Richmond. Then on Saturday, just to show you things aren't going to go completely to hell in a handbasket, Fort Scott, Kansas had a good sale on Saturday. Brought in 127 head of steers, weighed 797, or just almost 800-pound mark there at 147.35. That's your feeder flash for Monday.